Listen carefully because what I'm about to share with you isn't speculation. It's not theory. It's happening right now, and if you're holding silver or thinking about it, the next few weeks could define your financial future for the next decade. December 2025 just closed the books on something extraordinary. Silver gained over 21% for the year. But here's what nobody's talking about. That's not the story. The real story is what's building beneath the surface, and it's about to explode in a way that will catch 99% of investors completely off guard. The Silver Institute just released their year-end data, and buried in those numbers is a ticking time bomb. Global silver demand hit 1.21 billion ounces in 2024, record industrial demand. But here's the kicker. We're now entering the fifth consecutive year of supply deficit. Fifth year. Let that sink in for a moment. You know what happens when you have 5 straight years of consuming more of something than you produce? Eventually, the shelves go empty. And when the shelves go empty with silver, the price doesn't just go up, it goes parabolic. I want you to imagine something with me. Picture a massive warehouse. For decades, this warehouse has been stocked with silver bars, millions of ounces, billions of ounces. Every year, more silver comes in from mines around the world. And every year, industries take silver out for electronics, solar panels, medical equipment, batteries. For most of modern history, the warehouse stayed full. Sometimes it got fuller, sometimes less full, but it always had plenty of silver. Now picture this. Starting in 2020, something changed. Every year since then, more silver has been leaving that warehouse than coming in. Not by a little, by a lot. In 2024 alone, the deficit was massive. And it's not slowing down. It's accelerating. The warehouse is running out. And the people who need silver, the manufacturers, the industrial users, the technology companies, they're starting to panic. Because unlike gold, which mostly just sits in vaults looking pretty, silver gets used up. It gets consumed. Once it's in your iPhone or your solar panel or your medical device, it's gone. You can't get it back economically. Here's where this gets really interesting. The price of silver right now, as I'm recording this, is hovering around $30 an ounce. Some analysts are calling for $64. Others are saying $100. But I want to show you why even those numbers might be conservative. Let's talk about what's actually driving this demand, because this is where the story gets fascinating. Industrial demand for silver hit a record high in 2024. Not just high, record high. And it's not coming from one sector. It's coming from everywhere at once. Solar panels are consuming silver at an unprecedented rate. Every solar panel needs silver paste for the electrical contacts. As the world races toward renewable energy, solar installations are exploding. China alone is installing solar capacity at a pace that would have seemed impossible just 5 years ago. Each gigawatt of solar capacity requires roughly 100,000 ounces of silver, and we're adding hundreds of gigawatts every year now. Electric vehicles are another massive driver. Every EV uses significantly more silver than a traditional car. We're talking about 25 to 50 grams per vehicle for the electrical systems, contacts, and battery connections. As EV adoption accelerates globally, that's millions of additional ounces of silver demand that didn't exist a decade ago. 5G infrastructure is devouring silver. Every 5G base station, every new cell tower, every piece of telecommunications equipment, they all need silver for their electrical properties. Silver is the most conductive metal on Earth. There's no substitute that works as well. And as 5G rolls out across Asia, Europe, and eventually everywhere else, that demand isn't going away. It's growing. Medical applications are expanding. Silver's antimicrobial properties make it essential for wound dressings, medical devices, hospital equipment. As healthcare advances and populations age, medical silver demand continues climbing. But here's what makes this situation truly explosive. While demand is hitting record highs, mine supply is struggling. Silver doesn't come from silver mines mostly. About 70% of silver production is a byproduct of mining other metals: copper, lead, zinc, gold. When those mines slow down or become unprofitable, silver supply drops as a side effect. And right now, we're seeing exactly that. Mining companies are facing higher costs, regulatory challenges, declining ore grades. New silver discoveries are rare. The easy silver has been mined. What's left is deeper, harder to extract, more expensive to process. The Silver Institute's data shows mine supply basically flat. Meanwhile, demand is surging. That gap has to be filled from somewhere. And it's being filled from above-ground stockpiles, the warehouse I mentioned earlier. And those stockpiles are getting drawn down year after year after year. Now let me tell you about something that happened in 2011 that most people have forgotten. Silver went from about $18 an ounce in August 2010 to $49 an ounce by April 2011. That's a 172% gain in 8 months. And you know what the supply deficit was back then? Much smaller than what we're seeing now. The industrial demand was a fraction of what it is today. The fundamentals now are exponentially stronger. But here's what's different this time. In 2011, that spike was driven largely by investment demand and speculation. It was a momentum play. When the momentum broke, the price crashed back down because the industrial demand wasn't there to support it. This time, the industrial demand is real, structural, and growing. This isn't speculation. This is manufacturers who need silver to build products, and they're willing to pay whatever it takes to get it. I want you to understand something about industrial users. When a company needs silver to manufacture solar panels or electronics and they can't get it, their entire production line stops. They lose millions of dollars per day. So when silver becomes scarce, these companies don't negotiate. They don't wait for a better price. They pay whatever the market demands because the alternative is shutting down their factory. That's the kind of demand that drives prices vertical. Not investor speculation, not trading algorithms. Real companies with real needs and deep pockets who have no choice but to buy. And here's where this gets even more interesting. The investment side is just starting to wake up. Silver ETFs saw outflows for much of 2023 and early 2024. Investors were asleep. They weren't paying attention. But in the second half of 2024, that started to change. Money began flowing back into silver funds. Not a flood yet, a trickle. But it's building. When investment demand really kicks in on top of this industrial demand, we're going to see something spectacular, because there's only so much silver available. The COMEX warehouses where silver futures are settled have been seeing declining inventories. The London Bullion Market Association vaults are tighter than they've been in years. The physical silver market is getting squeezed from both sides, industrial users taking metal out and investors starting to accumulate. Let me paint you a picture of what this looks like in practice. There's a solar panel manufacturer in Asia. They need 50,000 ounces of silver per month to keep their production running. For years, they've had reliable suppliers. They order silver, it shows up, they pay the going rate, everyone's happy. But starting in late 2024, something changed. Their suppliers started saying, "We can get you the silver, but it's going to cost more, and we need longer lead times, and we can't guarantee the full amount." This manufacturer has contracts to fulfill. They have customers waiting for solar panels. They have workers on the payroll. They can't just stop production. So what do? They start paying premiums above the spot price. They start securing supply months in advance. They start hoarding silver in their own warehouses because they're terrified of running out. Now multiply that story by thousands of companies around the world, all competing for the same limited supply of silver, all willing to pay more to ensure they don't run out. That's not a recipe for stable prices. That's a recipe for a price explosion. And here's something that should terrify anyone who's short silver or sitting on the sidelines waiting for a pullback. The people who understand this market, the smart money, they're already positioning. Central banks have been accumulating gold for years, and while they don't typically hold silver, the same flight to real assets mentality is spreading to silver investors. Wealthy individuals are buying physical silver bars and coins, not for trading, for holding. They're taking delivery and putting it in private vaults. That silver is coming off the market. It's not available for industrial users. It's not available for other investors. It's locked away. Mining companies are starting to hold back supply. Why sell silver at $30 today when you know it's going to 50 or 60 or 100 in the next year or two? Some producers are building their own stockpiles, waiting for higher prices. That further tightens the available supply. The COMEX, the major futures exchange where silver trades, has a problem. There are far more paper claims on silver than there is physical silver in the warehouses. For years, this hasn't mattered because most futures contracts get settled in cash, not physical delivery. But what happens when industrial users start demanding physical delivery? What happens when investors lose faith in paper silver and want the real metal? We've already seen stress in the system. There have been delivery delays. Premiums for physical silver over the paper price have widened. These are warning signs that the paper market is losing its grip on price discovery. When that breaks, when the paper price and the physical price decouple, we're going to see chaos. I want to take you back to 1980 for a moment, because there's a lesson here that's incredibly relevant. The Hunt brothers tried to corner the silver market. They accumulated massive positions, driving the price from $6 to $50 an ounce. But their corner was artificial. It was manipulation. When it collapsed, silver crashed because there was no real demand to support those prices. What's happening now is the opposite. This isn't manipulation. This is genuine structural demand from industries that need silver to function. This is a supply deficit that's been building for 5 years and shows no signs of reversing. This is real. And here's what makes this moment so critical. We're at an inflection point. Silver has broken out of the $20 to $25 range it was stuck in for years. It's established a new floor around $28 to $30. The next move is going to be significant, and all the indicators suggest that move is up, not down. Technical analysts are looking at the charts and seeing bullish patterns everywhere. We've got a cup and handle formation on the long-term chart. We've got moving averages aligning. We've got momentum indicators turning positive. But forget the technicals for a moment. The fundamentals are what matter here. You've got record demand, you've got constrained supply, you've got declining inventories, you've got industrial users getting desperate, you've got investment demand starting to return, you've got geopolitical uncertainty driving safe haven buying, you've got inflation concerns making hard assets attractive. Every single fundamental factor is pointing in the same direction. Now, I know some of you are thinking about your retirement accounts. You're sitting on money in traditional investments, and you're wondering if there's a way to get exposure to this silver opportunity without having to buy physical metal and figure out where to store it. And the answer is yes. If you've got $100,000 or more in retirement accounts, you might want to look into how precious metals IRAs work. I put together a free guide that explains the whole process, how you can get physical silver or gold into your retirement account without triggering taxes or penalties. It's in the description below. Worth checking out if you're thinking about protecting some of your retirement savings with real assets. No pressure, just information if it's relevant to your situation. But let me get back to why the timing on this matters so much. We're in what I'm calling the final phase. The setup phase is over. The accumulation phase is ending. We're entering the acceleration phase. And once this really gets moving, it's going to move fast. Think about what happened with other commodities when they went into genuine shortages. Oil in 2008 went from $90 a barrel to $147 in just a few months when supply got tight. Lumber during COVID went from $400 per thousand board feet to over $1,600 in a year. When physical commodities get scarce and demand is strong, prices don't rise gradually. They spike violently. Silver is setting up for exactly that kind of move. And the people who are positioned before it happens are going to do extraordinarily well. The people who wait until it's obvious to everyone are going to be chasing prices higher, buying at premiums, struggling to find available supply. I want you to think about the solar industry for a moment because this is where the demand story gets really compelling. The International Energy Agency projects that solar capacity needs to triple by 2030 to meet climate goals. Triple. That means 3 times as much silver demand from solar alone. Where is that silver going to come from? Mine supply isn't tripling. It's barely growing. Recycling can't make up the difference because most silver in electronics and solar panels isn't economically recyclable yet. The technology exists, but it's expensive and not widely deployed, so that demand has to be met from existing stockpiles or from higher prices rationing demand. But here's the thing about industrial demand. It's not very price sensitive in the short term. If silver goes from $30 to $50 an ounce, That adds maybe $20 to the cost of a solar panel that sells for thousands of dollars. The manufacturer absorbs it. They pass it on to customers. But they don't stop buying silver. They can't. Their business depends on it. So higher prices don't kill demand. They just transfer wealth from silver users to silver holders. And that's exactly what's about to happen on a massive scale. Let me tell you about something that happened in the palladium market a few years ago, because it's a perfect parallel. Palladium is used in catalytic converters for cars. As emission standards got stricter, demand for palladium surged. Supply was tight. The price went from $500 an ounce in 2016 to over $3,000 an ounce by 2022, a six-fold increase. Auto manufacturers had no choice but to pay because they couldn't sell cars without catalytic converters. Silver is setting up for a similar dynamic, but potentially even more extreme because silver is used in so many different industries. It's not just solar. It's not just EVs. It's not just 5G. It's all of them at once, plus medical, plus electronics, plus photography, plus water purification, plus a dozen other applications. And unlike palladium, silver has a monetary history. People understand silver as money. It's been used as currency for thousands of years. When economic uncertainty rises, people buy silver as a store of value. That adds another layer of demand that palladium never had. We're seeing this play out in real time. In countries with currency instability, silver buying has surged. In India, silver imports hit record levels in 2024. In China, retail silver demand is strong. These aren't investors speculating. These are regular people protecting their savings from inflation and currency devaluation. And here's what's fascinating about the current moment. The general public still doesn't know this story. If you ask random people on the street about silver, most of them have no opinion. They're not thinking about it. They're not talking about it. It's not on their radar. That's exactly where you want to be as an investor, ahead of the crowd, positioned before the story becomes obvious. When silver was at $49 in 2011, everyone knew about it. It was on the news. People were talking about it at dinner parties. Coin dealers couldn't keep inventory. Premiums were through the roof. That's when you want to be selling, not buying. Right now, we're in the quiet phase before the storm. The fundamentals are building. The pressure is increasing, but the crowd hasn't noticed yet. That window is closing. The Silver Institute's report is out there. The supply deficit data is public. Smart analysts are writing about it. It's only a matter of time before this story breaks into mainstream consciousness. And when it does, when CNBC starts running segments about the silver shortage, when Bloomberg starts covering it, when your neighbor starts asking you about silver, the easy money will already be made. I want to talk about the geopolitical dimension for a moment, because this adds another layer to the story. We're living through a period of de-dollarization. Countries around the world are reducing their dependence on the US dollar. They're settling trade in other currencies. They're accumulating gold reserves. And increasingly, they're looking at silver as well. The BRICS nations, Brazil, Russia, India, China, South Africa, are actively working to create alternative financial systems. Part of that involves accumulating hard assets. China has been a massive buyer of gold. Russia has been stockpiling gold. These countries understand that in a world of fiat currency instability, real assets matter. Silver fits perfectly into this narrative. It's a monetary metal with industrial utility. It's portable. It's divisible. It's recognized globally. As the international monetary system evolves, silver's role is likely to expand, and that means additional demand from sources that didn't exist before. There's also the question of what happens if we see a real financial crisis. In 2008, silver initially dropped with everything else as investors sold whatever they could to raise cash. But then it rallied hard as people sought safety in tangible assets. If we see another major financial disruption, and there are plenty of reasons to think we might, silver could see explosive safe haven demand on top of the industrial demand that's already there. Think about the banking crisis we saw in early 2023. Regional banks failing, depositors panicking, the government stepping in with emergency measures. That was a warning shot. The financial system is more fragile than most people realize. And when that fragility becomes obvious, People flee to assets that can't be printed, can't be devalued, can't disappear in a bank failure. Silver is one of those assets. You can hold it in your hand. It's real. It's tangible. It has intrinsic value. And unlike gold, which is expensive and out of reach for many people, silver is accessible. You can buy an ounce of silver for $30. That makes it the people's precious metal. And in times of crisis, that accessibility drives enormous demand. Now let's talk about what could go wrong with this thesis, because it's important to consider the other side. What would have to happen for silver not to go significantly higher from here? First, industrial demand would have to collapse. That would require a severe global recession that shuts down manufacturing, stops solar installations, halts EV production. Possible? Yes. Likely? Given the structural trends toward electrification and renewable energy, probably not. Even in a recession, the long-term trajectory is clear. Second, massive new silver supply would have to come online. But there are no major new silver mines in development. The ones that exist take years to build. And with current silver prices, many potential projects aren't economically viable. So a supply surge isn't coming anytime soon. Third, a substitute for silver would have to be found. But silver's unique properties, highest electrical conductivity, highest thermal conductivity, most reflective, make it nearly impossible to replace in most applications. Engineers have been trying to find substitutes for decades. They've had limited success. Silver remains essential. Fourth, investment demand would have to stay dormant. But with inflation concerns, currency instability, and geopolitical tensions, that seems unlikely. If anything, investment demand is poised to accelerate. So when I look at the risk-reward here, the downside seems limited and the upside seems enormous. Silver could pull back to $28, maybe even $25 in a severe market sell-off. But the fundamental story doesn't change. The supply deficit doesn't go away. The industrial demand doesn't disappear. And any pullback just creates a better entry point. Meanwhile, the upside could be $50, $60, $80, even $100 an ounce over the next couple of years. That's not wild speculation. That's what happens when you have genuine scarcity meeting inelastic demand. The math is simple. If demand exceeds supply by 200 million ounces per year, and that deficit continues, eventually the available supply runs out. When that happens, price is the only mechanism to balance the market. Higher prices do two things. They incentivize more production, though that takes years to materialize, and they ration demand, forcing some marginal users to find alternatives or reduce consumption. But given how essential silver is to modern technology, that rationing has to happen through very high prices. I want you to imagine we're 2 years in the future. It's 2027. Silver is trading at $75 an ounce. You're reading articles about the silver shortage. Manufacturers are struggling to secure supply. Investors are piling in. And you're thinking back to this moment, right now, when silver was at $30 and all the signs were there. How are you going to feel? Are you going to be glad you took action? Or are you going to be kicking yourself for not paying attention when the opportunity was obvious? This is one of those rare moments in markets where the fundamentals are screaming at you, where the data is clear, where the trend is established, where the risk-reward is heavily skewed in your favor. These moments don't come along often, and when they do, you have to recognize them and act. The clock is ticking because every day that passes, more silver gets consumed, more inventory gets drawn down, more industrial users get desperate, more investors start paying attention. The window of opportunity is narrowing. I'm not saying you need to bet your entire net worth on silver. I'm not saying you should be reckless. But I am saying that if you don't have any exposure to silver right now, you're missing one of the most compelling investment opportunities of this decade. And if you do have exposure, you might want to think about whether it's enough given what's coming. The final phase is here. The setup is complete. The fundamentals are in place. The technical breakout has happened. The institutional money is starting to move. The industrial demand is accelerating. The supply deficit is widening. Everything is aligning. What you do with this information is up to you. But years from now, you're going to look back at this period and realize this was the moment. This was when the silver bull market really began. This was when the smart money positioned itself ahead of the crowd. This was when fortunes were made by people who understood what was happening and had the courage to act on it. The question is, are you going to be one of them? Or are you going to watch from the sidelines and wish you had paid attention? The choice is yours, but the clock is ticking. And time is running out to position yourself before this opportunity becomes obvious to everyone else.